In 2024, industrial demand for silver reportedly hit close to 680 million ounces, an all-time record for what appears to be the fourth consecutive year. But here's where it gets interesting. Global mines are estimated to have produced around 820 million ounces total. That suggests a deficit of nearly 50 million ounces. And according to industry analysts, this marks the fifth year in a row this pattern has emerged. Since 2021, market observers estimate we've drawn down roughly 820 million ounces of above-ground silver stockpiles. That's almost an entire year of global production essentially vanished. Today, I'm going to walk you through exactly why this supply situation could reshape silver markets in 2025 and beyond, and why silver recently touched what analysts are calling an all-time high, trading above 60. If you find value in this kind of market analysis, hit that subscribe button now, because I break down critical commodity trends that most financial channels completely miss. And drop a comment below with your silver price prediction for 2026. I read every single one. Let me break down where all this silver is reportedly going, because the demand story has completely transformed in the last 5 years. First, solar panels. In 2024, photovoltaic applications are estimated to have consumed somewhere around 1950. Let me put that in perspective. That's nearly a quarter of all global mine production going into solar panels alone. China reportedly installed close to 600 gigawatt of solar capacity in just the first 10 months of 2025. Industry sources suggest they added another 250 plus gigawatt. Each gigawatt is estimated to require roughly 3 ounces of silver. And here's what's fascinating. Despite silver prices hitting record territory, solar demand for 2025 is projected to remain strong. Analysts suggest around 19.5 million ounces. Why isn't it dropping? Because installations appear to be growing faster than manufacturers can reduce silver content per panel. Second, electric vehicles. A traditional gas-powered car typically uses somewhere between 15 to 25 drene of silver. An electric vehicle, industry estimates suggest 25 to 50 drene. That's potentially up to 79% more per vehicle. In 2024, EVs are thought to have accounted for roughly 25 million ounces, but EV production is reportedly growing at around 13% annually. 2027, just 2 years from now, some analysts believe electric vehicles could overtake traditional cars as the largest source of automotive silver demand. I'm not a financial advisor. This isn't financial advice, and I'm not affiliated with anyone mentioned in this video. This is purely educational analysis based on publicly available information. About that, we're potentially watching a structural shift happen in real time. Third, data centers and AI infrastructure. Global data center power capacity has reportedly grown over 5,000%. Every AI server, every 5G tower, every cloud computing facility requires silver for electrical contacts and conductivity. This is the silent demand driver that often gets overlooked. As artificial intelligence expands, silver demand from technology infrastructure appears to be accelerating significantly. These aren't temporary trends. These are decade-long build-outs locked in by government policy and the global energy transition. Before we go deeper, make sure you're subscribed, because I'm covering the AI infrastructure silver story in next week's video. You won't want to miss that one. But here's where it gets interesting. Even with demand at record highs, silver production appears barely responsive. Let me show you why. Now let's talk about supply. This is where the story becomes particularly intriguing. Global silver mine production in 2024 is estimated around 820 million ounces. The forecast for 2025 industry watchers suggest only about 83.5 million ounces. That would represent roughly a 2% increase. Let me show you why this matters. Industrial demand alone is estimated around 60-80 million ounces. That's approximately 81% of total mine production consumed by industry before we even consider jewelry, investment, or silverware. The math appears challenging. And here's the critical part. Despite silver recently touching above $64 per ounce, what many are calling an all-time high production seems barely responsive. In most commodity markets, high prices typically bring new supply, not so much with silver. Let me explain my understanding of why. Here's what most people don't realize. An estimated 70 to 80% of silver comes as a byproduct of mining other metals, primarily copper, lead, zinc, and gold. Think of it like this. Imagine you run a bakery that sells bread, and every loaf of bread comes with a free cookie. You can't just make more cookies because cookie prices went up. You can only make more cookies if you sell more bread. That's essentially how silver works. Miners can't simply ramp up silver production because silver prices are elevated. They're mining for copper or zinc, and silver just happens to come along. This means silver supply is fundamentally tied to base metal economics. If copper demand is weak, silver production potentially falls regardless of what silver prices are doing. If you're enjoying this breakdown, hit that like button. It helps the algorithm show this to more people who need to understand what's happening in the silver market. And honestly, YouTube algorithm has been brutal lately, so every like genuinely helps. Opening a new silver mine reportedly takes somewhere between 10 to 15 years from discovery to production. It requires hundreds of millions in capital and navigating environmental regulations, permitting, and community agreements. Even if miners started major new projects today, which many aren't, we likely wouldn't see that silver until sometime in the 2035 to 2040 range. Let me give you specific examples. Mexico, reportedly the world's largest producer at approximately 18 million ounces in 2024, only grew about 2% from 20. Peru, the third largest producer, actually appears to have declined around. Chile reportedly dropped about 17% in 2024. Australia is forecast to potentially decline 12% in 2025. The top three countries, Mexico, China, and Peru, are estimated to produce around 404 million ounces combined. That's nearly half of global supply concentrated in three countries. Any labor dispute, regulatory change, or geopolitical tension could immediately impact global supply. And here's the part that should concern you. Declining ore grades. The easy-to-mine silver is reportedly gone. Today's miners are processing ore with what some estimate to be 30 to 40% lower silver content than a decade ago. They're doing more work for potentially the same output. Now, you might be thinking, there's a deficit every year. Where's the silver coming from? That's exactly the right question. And the answer is critical to understand. So what does all this mean? Let's walk through the numbers. In 2024, total supply is estimated at roughly 1 billion ounces. That's approximately 20 million from mines and from recycling. Total demand, analysts suggest around 16 billion ounces. That would indicate a deficit of nearly 49 million ounces. Where did that 49 million ounces come from? Above ground stockpiles, silver sitting in vaults, ETFs, comics warehouses, and strategic reserves. Since 2021, we've reportedly had 5 consecutive deficits totaling somewhere around 820 million ounces. Let me repeat that. Approximately 820 million ounces. That's almost an entire year of global mine production that's been pulled from stockpiles. Inventories at major trading hubs are showing signs of stress. Shanghai Futures Exchange is reportedly at multi-year lows. London silver vaults are showing rising lease rates, indicating potential delivery pressure. Comics warehouses show what appears to be consistent drawdowns. Industry analysts estimate visible above-ground inventories have fallen from approximately 1.5 billion ounces in 2020 to under 1 billion ounces today. At current deficit rates, we may have perhaps 4 to 5 years of buffer remaining. Drop a comment right now. Do you think we'll see a supply squeeze in the next 2 to 3 years? I want to hear your thoughts on this. Here's what's critical to understand. Current deficits are happening with relatively low investment demand compared to historical levels. Back in 2010 to 2011, when silver rallied from around the $49, investment demand reportedly surged from approximately 50 million ounces to 250 million ounces in just 8. If that pattern happens again and the Federal Reserve is now in a rate-cutting cycle, which historically has triggered precious metal investment flows, where does that additional 100 to 200 million ounces come from? Answer appears to be it likely can't come from mine production, can't come from recycling. It would have to come from depleting stockpiles even faster. On December 12th, 2020, silver reportedly hit approximately 64.65 per ounce, breaking what many analysts consider the inflation-adjusted 1980 peak. As of today, it's trading in the low range. But here's what matters. This doesn't appear to be speculative mania driving prices. This looks more like a fundamental supply-demand imbalance. Major financial institutions have raised their outlook. Bank of America recently raised their 12-month target to around 60. ING expects silver to average approximately 2026. Some analysts are discussing 100 plus scenarios if investment demand fully returns. The gold-silver ratio has compressed to somewhere in the 67 to 69 range. That's reportedly its lowest level since summer 20. Historically, when this ratio compresses, it often signals silver catching up to gold's performance. If this ratio returns to its long-term average of around 50 to 60, silver could have significant upside relative to gold. Make sure you're subscribed because I'm doing a full video next month on the gold-silver ratio and what it's telling us about the next 12 months. That's going to be critical for anyone positioning in precious metals right now. But here's where 20 different from every other year. 5 major catalysts appear to be converging right now. Looking ahead to 2025 and 2026, 5 factors are converging that haven't been in place before. Factor 1, China's solar expansion appears to be accelerating, not slowing. China doesn't have a specific 2025 target for solar installations, but they're reportedly on track for 250 plus gigawatts this year. That's an estimated 75 million ounces of silver demand from one country, one sector, 1 year. The 14th five-year plan has reportedly been exceeded. Provincial targets have been surpassed. China's long-term goal is approximately 36 terawatts of combined wind and solar. Appears to be policy locked demand. Likely doesn't matter if silver is $60 or $80 per ounce. These installations seem to be happening regardless. Factor 2, critical mineral designation. In 2025, the United States officially designated silver as a critical mineral. This could change everything. It potentially means strategic stockpiling. It suggests domestic supply chain prioritization. It indicates countries may be viewing silver not just as a precious metal, but as strategic infrastructure material essential to national security. When governments start competing for silver alongside industrial users, demand dynamics could fundamentally shift. Factor 3, the Federal Reserve rate cutting cycle. Lower real interest rates historically have triggered substantial investment flows into precious metals. We saw this in 2010 to 2011. We saw it in 2020 with the Fed now cutting rates and real yields compressing. The conditions appear set for investment demand to potentially return. Remember, current deficits exist with relatively weak investment demand. If even 20% of 2011 level investment flows return, you could be looking at an additional 40 to 50 million ounces of demand entering a market already in structural deficit. I'm curious, are you positioned in silver right now? Physical ETFs? Mining stocks? Let me know in the comments. I love seeing how this community is thinking about this opportunity. Factor 4, de-dollarization trends. Central banks globally appear to be diversifying reserves away from dollar-dominated assets. While gold gets the headlines, silver is increasingly viewed by some as monetary metal-light, especially for countries that can't afford massive gold purchases. India, China, and Middle Eastern nations are reportedly quietly accumulating silver for strategic reserves. Factor 5, physical market tightness. This is the one that should concern market participants most. Rising lease rates in London indicate borrowing costs for physical silver are increasing. That's often a sign of delivery stress. When you see lease rates rising, inventories depleting, and prices hitting all-time highs simultaneously, that's a market potentially sending a distress signal. These aren't speculative scenarios. These are policies, data trends, and market signals that appear to already be in motion. So where does this leave us? Let me bring this all together. For what appears to be the 5th consecutive year, the silver market faces a structural supply deficit. And unlike previous commodity cycles, this one seems to be driven by permanent demand from the global energy transition, not speculation. Bank of America projects approximately $65 per ounce in the next 12 months. ING expects an average around $55 into 100 plus scenarios if investment demand returns to even half of 2011 levels. But here's what I think matters most. This isn't really about hitting a specific price target. This is about understanding that the supply-demand fundamentals appear to have permanently shifted. Silver is no longer just a precious metal. It's becoming an industrial commodity critical to solar energy, electric vehicles, 5G networks, AI infrastructure, and potentially national security. And there simply doesn't appear to be enough of it to meet both industrial and investment demand at current production levels. For investors, this could mean a multi-year structural opportunity, not a trade, but a fundamental real allocation based on physical scarcity. The question isn't necessarily whether silver goes higher. The question is what might happen when the above ground stockpiles potentially run out and we're facing a 100 plus million ounce annual deficits with no supply response. If you haven't already, smash that subscribe button and turn on notifications. I'm covering the entire critical minerals complex over the next few months. Lithium, cobalt, rare earths, and how they tie into the same supply constraints we're seeing in silver. And drop your biggest takeaway from this video in the comments. What surprised you most? The 820 million ounce deficit, the byproduct problem, China's solar build out. I want to hear what clicked for you. I'm also curious, do you think investment demand will return in force in 2025 to 2026, or will industrial demand alone potentially drive this market to 100 plus? Let me know your thoughts below. Thanks for watching. If you want to understand why the byproduct nature of silver makes it completely different from every other commodity, I covered that in detail in my last video. I'll link it in the description. And if you made it this far, you're exactly the kind of serious investor I make these videos for. I appreciate you being here. I'll see you in the next one.